Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention another fine folks to the Someday Dispatch of the Black Letter, where we contemplate thoughts worth thinking. And today we have a bunch of things on the agenda, a little bit of taste of this, a little bit of taste of that. First up is some cryptocurrencies. Then we'll look at gold, some precious metals, and of course, take a look at the stock market, see if it's taking a breath from its continued success from yesterday, which was following last week. So first up, the number of XRP scams remains alarmingly high. As you guys know, I like to keep my finger on the pulse of things in the crypto world and precious metal world as well. Just generally in the markets about what things might be testing my thesis. Obviously, as you know, I'm a fan of cryptocurrency, but particularly the top ones, so Bitcoin, Ethereum, and Ripple primarily. But it's always good to look at some negative news just to see if you can strengthen your thesis against it or if there is cracks starting to show. I think it's important to be able to hold two divergent opinions at the same time to battle them out in your mind to figure out which is perhaps the correct course of action. So for me, I like to see some negative news to see if that sways my opinion at all. Scams generally don't, but I thought it would be interesting anyway. We might have some new viewers on the channel that are new to crypto, so here we are. Ripple is becoming a major target in this regard. New XRP scams are popping up all over the place, putting the community on edge, ranging from fake giveaways to dubious live streams and airdrop claims. You guys have probably seen these all the time on YouTube, unfortunately. You know, they'll have an image of somebody famous in the either in the stock market investing world or the cryptocurrency world, and they'll say that he or she is giving away 5,000 Bitcoin, right? And they'll just play a video that oftentimes has nothing to do with the cryptocurrency in question, and there's a QR code there that says, you know, send us 0.5 Bitcoin and we'll send you 1 Bitcoin, or send us 1 Bitcoin and we'll send you 2, etc. Don't fall for that, folks. That's a big scam and you'll just lose your cryptocurrency. However, these folks are talking about a new crypto scam from XRP, not from XRP, that is using XRP in their scam. And this is one type is an email scam, which allegedly comes from the Ripple itself. It talks about a proof of keys ownership and staking event. And this is very unusual, as Ripple's network doesn't support staking, nor is there any scheduled event whatsoever. And here's an example of what it sort of looks like, introducing proof of keys ownership and staking event. So just be aware of that, folks. At least one user lost nearly 100,000 XRP, currently valued at over $17,000. So it's easy to fall for these scams, and they're becoming more and more sophisticated. I mean, these are just riffs off of the old and original granddaddy of them all, the Nigerian prince scam, but they're becoming more and more important. So be careful. Obviously, Ripple is trying to address this, but there's only so much they can do. So just be aware there are scams out there, continue to be scams. If it looks like a duck, talks like a duck, and walks like a duck, then it's probably a duck, right? So people are unlikely to give you free Bitcoin or other coins or tokens without some sort of a legitimate reason or competition, right? And we'll look at one here in a minute. But generally, if somebody's offering you to send them some cryptocurrency in order to get more, that's generally a scam. Any realistic and verifiable cryptocurrency giveaway will not require you to send them coin at all. At the most, you might just have to send them your public key address, answer some questions, or do some other sorts of things in order to be put into a draw for some giveaway, right? But you should never have to send coin in order to earn more coin. Ripple News Today, ex-US congressional candidate says people who hate XRP will eventually start using it. July 5th, 2020. I guess that's the date of the article, not when that's going to happen, obviously, because that is past. Ripple XRP might be one of the most popular cryptocurrencies in the market, but this isn't because of its use cases. Granted, the cryptocurrency has real-world value in the financial world, but its negative price action has discouraged users from using it. David Goldstein, an ex-United States congressional candidate, said that most of the people who are currently critiquing the XRP token will eventually start using the token, whether they like to admit it or not. In his words, those who hate XRP will be using it shortly, 100%. According to Goldstein, these haters will soon realize how amazing the XRP token is, and they will start using it. He made this comment on Twitter after people slammed XRP due to the price decline. Most of these people are just mad at Ripple and angry that the price of XRP is going to keep falling. Well, we don't know if it's going to keep falling, but it has been, as you can see currently in the last 24 hours, it's actually been up 6%, which is terrific. But XRP has been in a trend for a long time, for probably over a year, I think now. But it did reach a height, and we'll take a look at it here in a minute, but it did reach a height a while ago. But currently it is in sort of more of a sideways consolidation pattern lately, I would suggest anyway, which for me is a great buying opportunity. Remember, nothing is financial advice, it's just my opinions and my thoughts I'm sharing. Goldstein has always had strong positive opinions about XRP, so you take that under advisement as well, right? Some folks will obviously be talking their book. I am certainly, so take my thoughts with a grain of salt. I have XRP, so obviously I'm hoping it'll go up, but I also like to try and keep an open mind to the fact that I can be proven wrong and change my thesis and perhaps get out with a loss if that's the case. But nevertheless, always have to seek several sources, or at least I like to, just to verify that my thesis is still holding up and that perhaps I'm not getting emotionally involved in my trades. Cryptocurrency-focused docu-series airs to millions of viewers via the Discovery Science channel. I thought this was quite interesting because it just goes to show you that slowly but surely cryptocurrency is starting to get more and more into the mainstream. People will start talking about it, start understanding it more, start asking questions, which is terrific. But what we really need, and I think this will probably take a few more years, maybe a handful of years, we really need cryptocurrency to become as easy to use as a credit card or your Android or iPhone wallet app, right? We just tap something from a wallet application that allows you to pay either by cash or by Bitcoin or Ethereum or Dash or whatever it might be. Until we get to that point, I think, yeah, we won't see the huge parabolic moves perhaps that we're hoping for. But I could be wrong. Been wrong before plenty of times. Open Source Money recently aired on July 4th and premiered on the Discovery Science channel. The new show gave millions of Discovery viewers information concerning Bitcoin, cryptocurrencies, initial coin offerings, and blockchain technology. The focus of the story is mainly about the Dragon Chain initial coin offering and how the project's creators had to deal with the United States Securities and Exchange Commission. You guys let me know in the discussion below if you've actually had a chance to see it. I didn't know about it, so I'll perhaps try and put a recording on to catch it. But let me know if you've seen it, if you've enjoyed it, what it's like, and if you learned anything or it's helpful at all to even look at. Despite the fact that the filmmakers follow the Dragon Chain creators around for a bit, the first episode also acts as a Bitcoin 101 lesson. The show's theme also focuses on the current regulatory attitude toward cryptocurrencies in the United States. The website also notes that there's a provably fair 500,000 Dragon giveaway, and viewers need to find clues each week in order to win. And so here I'm talking about giveaways that are legitimate. Of course, you won't need to send them any Dragon in order to get more Dragon, but you will have to see clues from within the website itself. So for example, it talks about this week's questions had a number of keywords and numbers that the viewer must choose in order to participate in the contest. Words and numbers featured this week included 1776, pizza, NASCAR, cheese balls, Disney, Raymond, Bexy, Biaxi, Hyundai, saddle, or avocado toast. After each episode, a weekly prize winner will be selected, explains the docuseries producers. All correct answers from the start of the contest are entered into the grand prize drawing. So there you go. That's a legitimate giveaway, and they're not requiring you to send them any cryptocurrency at all. Ethereum beats a Bitcoin and becomes biggest winner of Quarter 2 2020. CoinGecko reveals that the crypto market has continued to grow even in the crisis caused by the COVID-19 pandemic. Bitcoin and Ethereum have managed to reach performance levels similar to those they had before the market collapse, as shown in the chart below. According to CoinGecko, the 5 major cryptocurrencies, which are Bitcoin, Ether, XRP, Bitcoin SV, and Bitcoin CH, those are 2 Bitcoin forks, have shown an average gain of 22% in Quarter 2 2020. As you can see here, the top 5 currency returns. ETH is the green one at the top here, had about a 70% return almost for Quarter 2, followed by Bitcoin. XRP, unfortunately, I think is flat on the year, which is not necessarily a bad thing for those interested in it. Like I am, I consider this still a great opportunity to get more. Unfortunately, Bitcoin CH and Bitcoin SV, I'm not sure which one of those are. Perhaps we'll see in a minute. I'm not familiar with those, so those don't really concern me. Bitcoin retained its market dominance during the second quarter of 2020 with 68.1%, and that's of market dominance, not necessarily the earnings, as you can see here, right? This is Bitcoin, followed next by Ether, USDT, I'm not sure which one that is, and also XRP up at the top here too. And all the others make up the small amount. So this is why I like to keep it simple and just focus on the top, or choose at least from the top 5, top 10 or so. I know I have Stellar that's in the top 15 or top 20, but I think within the top 20, 25, you're probably reasonably safe if you're well diversified, but that's not financial advice. Unlike other assets, Bitcoin is up 78% in quarter 2 2020 from its lowest annual price of about 3,800. So if you were able to get in at around that, you've done very well. And here you can see this was the March bottom. It said 3,800, but I don't see 3,800 here, but it probably hit 3,800 at some point. Only 27% of the total Bitcoin supply has moved during 2020, so people are hodling as well, as you most likely know. Anyway, I thought that was interesting. Some information on how the top 5 currencies are doing well. Of course, a lot of people are all into altcoins, which is terrific. But for me, I find those more difficult to choose amongst to see which ones might be the next ones to go parabolic. And of course, with altcoins, arguably, you'll see perhaps a much greater 100,000x much quicker than perhaps in Bitcoin and Ethereum. I still think, though, that as you can see, Bitcoin and Ethereum have a long runway yet ahead of them. Okay, so that finishes up our look at the cryptocurrencies, but we'll take a look at the coin market cap of the top coins. You can see everything's sort of fairly stable at the top ones. Ethereum, Bitcoin roughly flat. Bitcoin Cash and Bitcoin SV, those are the other two we're talking about. Those are up quite a bit. Not sure why, as you know, I don't follow them. Cardano, of course, continued to do well. I think primarily because it's going to be placed on the Coinbase platform soon. Tezos and Stellar down here, sort of also up a little bit, holding steady though. There you go, that's your top 20 coins. And we're going to have a look at XRP. So let's take a quick closer look at XRP. As you can see down here, so green is the price of the coin. As you can see, it hit a high here of about $3.53. And ever since then, it's sort of been on a downward trend. Even still from January of last year, sort of somewhat down because it was at 36 cents. So it's certainly down from there. From January 20th, it's sort of roughly flat because currently it's about 18 cents, and the start of the year was about 19 cents. So there's XRP for you. I want to spend a little bit of time on WTF happened in 1971 because I found this very interesting, and I would encourage you just to have a look through it yourself. Because, of course, what happened in 1971 is we went off the gold standard in America particularly, and that obviously affected the rest of the world and the world currencies. Growth in productivity and hourly compensation were tracking together until that time, and then productivity continued, but, of course, our compensation didn't. Very interesting. Here's the real GDP, real wages, and trade policies in the U.S. You can see the real GDP per capita, and then at 1971, come off the gold standard, and then all sorts of shenanigans start to happen. And you see the average real wage from the CPI. So income gains widely shared in early post-war decades, but not since then. So here again, 1971, you can see that the wealth of everyone was increasing. And of course, now you see the top 5% have done extremely well. The median have just barely made some 20% extra, and the bottom 20th are barely above where they were back in 1971. Awful. Interestingly, the real GDP per capita median female income has had a bigger gap than it was originally, but not as much as you see from men who were earning more relative to GDP per capita, but of course have come off the rails here. So I wonder, that's an interesting chart, and I don't quite understand it. I haven't given it a lot of thought. Of course, here we see inflation. There was some inflation before, obviously, because I think since around 1933-ish or so, I think we came off the full gold standard, and it was more of a fractionalized gold standard, is my understanding. Of course, so that increases in inflation. Here you go, it's just going insane. Consumer Price Index, of course, after 1971, same story. Electricity, food, and fruit CPI, very interesting. Of course, here the home prices, New York and Boston, they were sort of fairly close. The median house price in New York, the median household income in New York were roughly the same. So it took you roughly a year salary to buy a house. There's the average sales price of houses sold for the United States, federal minimum wage, hourly wage. You can see that the dollars per dollar per hour earned has just gone exponential. Of course, this is the housing crisis here, great financial crisis. Official U.S. gold reserves and gold prices came down, sort of flattened over a little while. Hyperinflation episodes, currency crashes. All major currencies have depreciated over the past century relative to gold, as you can see. Especially in 1971, things really started to come off the rails. Here's the income growth from 1971 to 2012. You can see that before 1971, the bottom 90% of earners were earning we're seeing their income grow terrifically, and the top 1% of earners not so much. And then, of course, what this happens in 1971, and the bottom 90% of earners, their income growth flatlines. And slowly and surely, especially in the 1980s, thanks Ronald, things start to improve for the top 1%. Countries of banking crisis, income inequality in the US. You can see on the gold standard, share of the top decile, and the decile is 10% in national income. You can see they had about 33% roughly. Now, of course, they have almost 50% of the money, or perhaps more by now. Income share of top 1% relative to the bottom 90%. And there's a federal debt. National debt, look at this chart, it's just ridiculous again. 1971, you go off the gold standard, it seems you can't keep a reasonable budget anymore. And of course, US federal deficits and surpluses versus GDP. 1971, we practically always had a deficit, right? Whereas historically it was roughly similar outflows and inflows as you would expect on a gold standard. Of course, then World War I, Great Depression, World War II, and of course now 2020. This will probably go down further, I imagine. S&P 500 ratio, you just look at it, it's still one of its all-time highs. But the Schiller P ratio, you can see we're well above our highs. We're around the 1929 peak. Here's the US merchandise trade balance again. You can see now it's been generally a loss. I mean, these charts are exceptionally interesting. There's just so much going on here. Number of lawyers and population per lawyer, this is also interesting. After the gold standard. It tells you a lot about how society has changed. Number of pages in the Federal Register, incarceration rates. I mean, it's astonishing how practically the whole society changed as soon as we got off the gold standard. It's amazing. Unwed women having given birth to children goes up again. Now, perhaps there's multiple reasons for some of these social changes, but it seems obviously very coincidental that around 1971 we started to see these big changes. I think perhaps going off the gold standard, creating debt, the consumer becoming more entrenched in debt, and the government as well has perhaps created societal ills, I would argue. Not solely, but in large part. Anyway, I thought that was interesting to spend some time with that because to me it was really eye-opening. And with that, let's take a look at the price of silver and gold. So this is year to date. You can see silver is practically at about where it started the year. So in my mind, that's a great looking chart because it means that for me, that I still see opportunities to buy. And let's take a look at gold. And here's gold chart. Year to date, you can see it's done quite well. Let's see if we can see how much it is. Gold's up about 17% on the year, so that's terrific. And I still think gold has a ways to go. Let's do all of it. You can see it's almost at an all-time high. It's gone up well. But I mean, we could expect this again as this depression and recession we're in starts to really gain momentum. So we could see another parabolic rise. So it could go way higher than this. Folks are talking $3,000, $5,000, $10,000 an ounce gold, but we'll see. And then let's go to the main page and have a look at the market summary. The S&P 500 is roughly flat. NASDAQ is up always. NASDAQ doesn't seem to have a down day ever. Dow Jones roughly flat. I mean, I consider this roughly flat. We'll see what happens later in the market. But yeah, I mean, the madness continues, folks. We'll see what happens. Okay, lastly, talk about China's stock market just entered bubble territory. The US could be next. Well, arguably, the US is already in an almost everything bubble. The Dow Jones Industrial Average soared on Monday after Chinese stocks went parabolic. China's Shanghai Composite gained 5.7%. Its biggest gain since July 9th, 2015. China's stock market took off after an editorial appeared on the front page of the state-run China Securities Journal calling for a sustained bull market, something Barron's Al Root likened it to the Fed telling investors that US stocks were too cheap. Up and away. Here you can see the CSI. It's up 12.3% on the year, I guess, whereas the S&P hasn't quite made it to flat yet. Onshore equity markets in the country have a history of bubbles that can run strong and surprisingly long. So that just goes to show you, the market can remain irrational longer than you can remain solvent. And of course, I'm experiencing that because, as you know, I'm short the S&P 500 currently and losing my shirt. But we'll see. I'm starting to feel the pain. I might have to cry uncle in a minute, but we'll see what happens. I do believe that we're probably going to see mostly gains towards the election. Then after election, I think the other shoe will drop, but who knows? Can I wait that long? I'm not sure. It's hard to see you bleeding money all the time. Anyway, let's take a look at the 8-ball economist. So time to ask the online oracle for our question. And my question for today is, will XRP gain more than 25% by the end of the 2020? As you'll remember, here it says, people who hate XRP will eventually start using it. So, of course, as we discussed, XRP has sort of been tracking sideways, if not down, for the last few years. And people are getting frustrated and bailing on it, probably. So let's see if we can gain 25% on our XRP by the end of 2020. What does the 8-ball have to say about that? My reply is no. So folks, XRP arguably is not going to do much, I think, according to the 8-ball economist, until the end of the year. So there's chance for me, I guess, to continue to buy a little bit here and there. So that makes me happy. Anyway, folks, thanks so much for joining me. I appreciate you. I appreciate the comments down below and spending time with me. Thanks very much. Please be kind and take care of yourself out there. Stay safe and healthy. And remember, dum spiro, sparrow.